What's going on, everybody? Wanted to hop on and talk today about how you can avoid low probability conditions when trading the market. One of the things that I really struggled with when I first started trading was being able to identify when there is going to be low probability conditions. And I believe one of the best steps and one of the best qualities that you can build as an intraday trader and as a trader in general is being able to identify low probability conditions versus high probability conditions. And today I'm going to walk through what I look for when seeing low probability conditions. uh, Yesterday was a great opportunity to learn about low probability conditions and high resistance liquidity. So today I wanted to walk through what that may look like and how you can avoid these and how you can spot these before the market even opens. So first and foremost, what I view as low probability conditions is high resistance liquidity. And high resistance liquidity is basically when candles are overlapping and there's going to be a tough time to get to either end, because we can see that at 7 a.m. we had the New York Open and we immediately drop lower and then drop higher. But look at how these candles are just overlapping. They're overlapping. They're not really being able to, momentum isn't really being sustained on either side. We take out sell side, these relatively equal lows right here, and then we go back up and we take out buy side and take out these highs right here at this 8:30 open, because we had news yesterday. So now I'm seeing, when I get to the desk this morning, I'm seeing that we have both ends of the range taken. So we have sell side taken and we have buy side taken. So now that I know that we have sell side and buy side taken, I'm looking to see if there's still any possible areas of relatively equal levels that I can target. And the thing that I'm noticing is, one, we don't have any relatively equal levels. Both sides, buy side and sell side, are jagged. And then also we have these overlapping candles. You can see it on the 5-minute chart. You can see it on the 15-minute chart. There is no sustained momentum on either side of buy side or sell side. And when we have both sides that are jagged, that is probably going to mean that there's a possibility for low probability conditions, and we are in a high resistance market. So when I'm making my plan for the trading day yesterday, I'm recognizing that we have high resistance liquidity. We have jagged edges on both sides of the market. So both sides have been worked already during the pre-market. So I'm not expecting much during the 9:30 open and after that. And what we can see is we had these choppy conditions afterward. We took buy side, or we took sell side, then ran the buy side. ES at the time dropped lower, and it also had high resistance liquidity. But this is just something that you can spot in the morning. We have these overlapping candles, buy side and sell side are taken. So now that I'm able to spot this high resistance liquidity and these low probability conditions, I'm able to, kind of sit back and be able to watch price action and allow more price action to develop. So maybe later on in the week, I can take a better trade or just preserve my capital, because I understand that these are low probability conditions right here. When we see, I'm gonna keep on hammering it home. When we see both sides of the range get taken and price is jagged on both ends, there's nothing really for me to target. Okay, there's no relatively equal levels that I can target. It was taken at buy side, or price got swept at buy side during pre-market after the 8:30 open, and then we moved lower. We took sell side, so we're just continuing to chop around here. And the other thing to note is, look how we're failing each fair value gap, bearish and bullish. Order blocks are being disrespected. Change in the state of delivery is being respected on both sides. When these candles are overlapping like this and no PD arrays are being respected, this is a red flag for low probability conditions. So when you come into the market every single day and you're seeing that we have these overlapping candles in the market, then it's important for you to recognize and be able to take a step back and say, hey, this may be low probability conditions. I know my setup is going to come up a few times a week, a couple of times a week, and I don't need to trade every single day. The moment you start being able to recognize what high probability conditions looks like versus low probability conditions, that's when you take another step as you take another level up. You step up another level as a trader. So what you can do is, like, the step-by-steps that I take are coming into the market every single day. Are there any relatively equal levels? This morning, no. We're trading above midnight open, which is another layer that I have. We're trading above midnight open, so theoretically I would want to look for shorts. There's also no relatively equal lows down here because they got taken during the London session, right? So now that I see that there's really no relatively equal levels on either end of the market after the 7 a.m. open, that is such a red flag for me that I want to really note and be careful of going into the morning session. So where are we at in relation to the midnight open? What side got worked post 7 a.m. and then in this case, both sides of buy side and sell side got taken. There's jagged edges on both ends. There's no relatively equal lows, and then look at these candles that are just overlapping. All of these candles are overlapping post 7 a.m. and this is screaming high resistance liquidity, low probability conditions. It's going to be hard to get from end to end, really. Now, price did go from end to end, but it wasn't without a stop out first, and then going to either end. And then throughout the rest of the day, we kind of just chopped here. We stayed in this range right here. Look at how these candles are overlapping. We don't want to trade this. We want to trade something that is a little bit more like this, where we displace up, we leave relatively equal lows. I'll go back over here. Something like this is on a Monday, like the previous video that I made. We have these relatively equal lows that were made right here, post 7 a.m. Market open at 9:30. We manipulate higher, take out buy side liquidity one more time, and then we trade all the way down to that sell side liquidity and then the lower targets. Look how much cleaner this is compared to the other example I just showed you. We have relatively equal lows right here. Sell side wasn't worked. The buy side is clearly being worked. So we're waiting for one last manipulation leg higher, and then a clear change in the state of delivery, run on a fair value gap lower, and then we're taking out these lows right here, these lows right here, these lows right here, these relatively equal lows right here. This is a signature that I've been looking for, that has been saving me a ton of money. But I hope that this video helps you guys, and I hope that you can start being able to recognize high resistance liquidity versus low resistance liquidity, low probability market conditions versus high probability market conditions. And I hope that you guys will be able to take this video with you and continue to just propel your game as a trader. And until next time, I'll talk to you guys later.